What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Tuesday, November the 9th. As always, guys, nothing that is discussed on the videos is financial advice. It is simply financial education, simply trying to teach people you don't have to slave in 9 to 5s Monday through Friday. You can easily hustle 24/7 in the market and still accomplish all those financial goals, dreams, and aspirations you may have for yourself, right? You're going to get out whatever you put in, as it is with anything in life, right? But let's get to work as always. So as you guys see from the top left corner of my chart, this is ticker VRM, otherwise known as Vroom Incorporated, right? Important takeaway, this company recently, or I guess you can call it recently, started trading publicly on June 9th, 2020. As you guys do see, when it hit the market, essentially trading, it started at 38.39. This company is specifically an e-commerce auto dealership, right? So think of them like another Carvana, right? Same platform, same concept, selling online, making everything simpler for consumers to buy or sell vehicles online. However, it's just named Vroom, right? And this one is based out of Maryland, now out of Texas, I believe, what I read from the reporting. But as you guys do see, started trading at 38, quickly took off in the beginning, straight to the top, essentially, all the way to 75.34 that it peaked on September 1st, 2020. This is 2020, right? As you guys see, in the latter part of 2020, heading into 2021, it did drop a little back into the 40s, where essentially it sat in this channel here from 52 to 33, essentially, and where it lived all the way up until August of this year, right? August of this year, you see that they did have earnings that they actually did barely beat on, but they beat. But yeah, you still see this rundown in price specifically, right? This price currently sits today at $19.13. They actually had a 0.16 red day today, or otherwise losing 3 cents from the share price, right? Taking a look at the indicators, you do see that in the MACD, we are in a buying period. On the RSI, you see that we are essentially sitting right on oversold. Below neutral at 35.5. Again, oversold is 30. So just keep that in the back of your mind. And then looking at the accumulation distribution line, you see that people have collected or taken profits as money has left this ticker, right? So that kind of gives you a fundamental basis of Vroom, the ticker, and the chart, right? And what it's telling us, right? A lot of opportunity. Definitely this RSI being close to oversold is something you need to pay attention to anytime you're investing in a ticker, because that tells you that it does have potential to the top side. Not always, but in some cases, right? And I'll tie it together at the end of the video to show you why I feel it will specifically, right? So some of you may be wondering, well, okay, what the hell is Vroom? Well, let's take a look. They have a short video.
Looking for a better way to buy a car? Vroom has you covered. No haggling, no hassles, no trips to the dealership. It all starts on Vroom.com, where you can explore a wide variety of vehicles from sports cars to sedans. When you find the one, just click and follow the simple steps. If you have a trade-in, let us know and we'll appraise it for you. Then choose how you want to pay. Let Vroom help you get financed. Use your own financing or pay with cash. Add the protection you want. Then, it's time to make it real. Upload documents like driver's license and insurance, make a deposit, and sign and return all the necessary paperwork. We'll book your car for delivery, typically within just 14 days. You'll have 7 days or 250 miles to make sure it's right for you. If it's not, we'll take it back and refund the purchase price. Never go to a dealership again. Go to Vroom.com, buy a car, and we'll deliver it straight to you.
That kind of gives you a fundamental basis of Vroom, right? Their biggest thing is never go to a dealership again. Some of you may have caught it, some of you may have not caught it because it did come really quick, but this company does offer their own financing for vehicles. That's always a big plus for a company to do its own financing. Some of you may have known that, some of you may not know that, but let me tell you firsthand, if a company does their own financing, that tells you they have enough capital to be able to support that extension of their business, which is very bullish in anything having to do with finance. Just keep that in the back of your mind. Pocket it as an ace up your sleeve in case you ever deal with another company and you see that they do financing themselves. That automatically should tell you this is very bullish. They have capital to do financing for their consumers in case, for example, they can't qualify with someone else. Now, the other takeaway, never go to a dealership again. If you've never bought a vehicle, or if you have bought a vehicle, then you know firsthand it sucks going to a dealership and sitting there for hours negotiating a car. I absolutely hate doing it. I've never bought a vehicle online. The next vehicle that I buy will be essentially a vehicle that I buy online, but more than likely it's going to be an EV specifically. Funny enough, they actually do promote selling Teslas on Vroom. So funny enough, I may end up buying one here one day. Who knows, right? But again, that's a little bit basis of this company. They do have some reviews from like Business Insider, Yahoo, USA Today, Bloomberg, right? They have a lot of positive reviews, right? Specifically under their website, they also do have an investors relations section. This is how they market themselves specifically. Vroom is an innovative end-to-end e-commerce platform designed to offer a better way to buy and a better way to sell used vehicles. The company's scalable, data-driven technology brings all phases of the vehicle buying and selling process to consumers wherever they are. We offer an extensive selection of vehicles, transparent pricing, competitive financing. That's a big one. Competitive financing, contact-free, and home pickup or delivery, excuse me. And then the name of where it's traded and the name of the ticker, right? But when I went through the website, they had a couple press releases, right? You see here, increasing their presence in Houston, launches a new TV spot, right? Little simple things, nothing major, right? There was nothing else really major that I would call a catalyst on their webpage. So I went digging through their financials because I wanted to see what they had done in Q2, right? Well, first and foremost, take a look at this. E-commerce unit sales up 172% year over year. That's a ridiculous number to be politically correct. E-commerce gross profit up 588% year over year. So that right away caught my attention. Like these are some pretty staggering numbers for used car sales, right? So you got to keep that in the back of your mind. Now, yeah, I get it. COVID in 2020 and 2021 was the year that literally everybody bought a vehicle, apparently, especially used vehicles, because we saw that a lot of dealerships did have shortages of used vehicles. Clearly, this company didn't have a problem finding them and selling them, right? As you can see from the revenue growth and the numbers that they're putting up, right? 600 million in additional liquidity. Again, as I mentioned earlier, they do have cash on hand, which is why they can offer that finance extension to their business, which only makes them more bullish and more competitive against their competitors, right? If you don't want to actually ever dig into some financials and you just want to get the bare bones, what you need to take away, take a look at this row here, percentage of change, right? 227.9% increase, 304% increase on e-commerce revenue. What is this? E-commerce gross profit, 230% growth or increase. Profit per vehicle, 1,273%. Product gross profit, 304% increase. Average vehicle selling price. The cars are even selling for more, right? Obviously, with the shortage, the less cars there were, the higher the prices would go, right? Supply and demand, simple economics. 587.6% increase, right? So obviously, if you dig through here, they have a lot of positive growth and a lot of positive areas of the revenue, that the way they generate revenue specifically, and that's fine, right? I'm more curious to see if they will be able to beat once again in earnings 2 days from now. But specifically, what I also wanted to see in here was their forward-looking statement, which is usually somewhere down at the bottom, right? Here we go. So financial outlook for the full year 2021, we continue to expect triple-digit year-over-year growth in e-commerce unit sales, more than 200% year-over-year growth. For a company to put that down on paper, I can't emphasize to you how bullish that is, right? They're willing to commit to their shareholders a number, and they are not afraid to put a target on the wall essentially and say, we're going to hit this bullseye. That is extremely bullish. Again, I've looked at a lot of financial earnings reports. Some do, some don't, right? Some sway away from that because they don't want to be held accountable to it. It's a fact that this company puts it out there very clearly visible. To me, it is a bullish sign, right? They're confident in their abilities. Obviously, the fact that their selling prices are increasing, obviously that they're generating more numbers, getting through more units or vehicles specifically, right? Has them really bullish. This was probably one of the best things I saw. Total revenue expectation, 558 million to 891 million, right? That's a pretty substantial growth year over year for essentially a new company that's been publicly trading only a year and a half, right? But I think you get the point from this, right? As I always like to do, aside from this, oh, and before I do, I'll make sure that I leave this linked in the description of the video below in case you guys want to dig through it and understand a little bit more. You're more than welcome to. But I always like to give you guys some targets from what the smart money is thinking, right? So as you see from the Nasdaq VRM Analyst Research, they do have a strong buy on it. You see 11 analysts are offering recommendations. B of A, Jefferies, JP Morgan, KeyBank, Piper, Sandler, Raymond James, Stifel, Trust, Wedbush, and William Blair. Their low consensus is $25. Remember, we're sitting at 19, so that's essentially giving you a $6 swing to the top side. 43 being the average, that's essentially a 2x on your money. And then the high of 60, that essentially in best case scenario is a 3x on any money you would choose to invest, right? So that was another flag that kind of caught my attention. The targets are really high compared to where the ticker price is today, right? Going into Marketbeat, they do also have 12 analysts reviewing it here that they are seeing. As you see, they have a consensus of a buy. Analyst price target 52.27. Remember, we're sitting at 1933. That's, again, a little past the double up. Looking at the low, they see a low of 30. That's essentially as a $10 swing. Average being 52, again, a double up. And then the high, best case scenario, would be 70. Well, that's essentially, if you're sitting at 20, that's 2.5x on your money, essentially, if that was best case scenario, right? So just something to keep into account, right? Take it with a grain of salt. No one can predict what a ticker can do, not including myself or anybody else, including smart money, right? It's just, again, speculation. Looking at who's holding what, institutional ownership, there is a significant amount of institutions holding Vroom specifically. Obviously, you can see the buys and the sells up here, but I'm more interested to see who's actually holding, as you always like to see from my videos. You see BlackRock stands out, Vanguard, Bale Gifford, right? And the one I always look for that most of you have seen if you've seen my videos, Renaissance Technologies does have a stake in Vroom with 245,000 shares, otherwise worth $10.29 million that they've been holding since August 13th reported. So why am I so bullish on this for some of you that are new to my videos? Renaissance Technologies is one of the best or the elite hedge fund out there. They have an AI-driven system that makes their picks specifically for what they choose to invest in. That AI-driven system has produced some of the best returns ever known, right? So just keep that in the back of your mind. Renaissance Technologies, for those of you that are curious, did also take a stake in AMC, funny enough. So the fact that they're in Vroom just gives me a little bit more confidence in what I'm buying. Normally when I see them in a play that I'm interested in, again, it's just something that makes me a little bit more bullish. That's me. Again, you don't have to treat anything I say as fact. You can simply treat it as opinion. Please do your own research. Please do your own due diligence, right? And lastly, what I always like to do is show you guys my favorite tool, Unusual Whales. As you guys do see, no presets on the filters, everything cleared out, and we go into the options chain and break it down by the flow. And what do we see? Bearish over bullish for the 11/19 expiration at the 17.5 strike. But take a look at this. When we go in and start increasing some premium, let's go 15,000 first. Take a quick peek, and we break this down. Once again, you see that it is bearish over bullish, right? And the strike that predominantly stands out being the 15 and obviously the 20. Well, we're already sitting in 1933, so that doesn't really help us. Let's keep going on the premium though. Let's go up to 25,000 and let's see what we get this time. So now that we've increased, now you see what stands out, the expiration, January 2022. This would be the strike, or the expiration, excuse me, that I would favor for anyone that's interested in this play, and I'll tell you why. Take a look at the strikes that are alerting. 20 and 30 automatically stand out. But let's keep going, right? Because it's good to get perspective of what people, especially bigger money, are thinking, like the whales, right? So $50,000 premium. Let's take a look. What do we see again? Stands out January 2022, and take a look at these strikes. 30 and the 40 now stand out. Remember, we're sitting at 1933. So obviously there is momentum for the start of the year. Hopefully, if this company can have some really smashing earnings, that'll get it set on the right track and getting positive momentum and growth and getting back to its capable highs back into the 70s potentially, or even the 30s and the 40s, where essentially it's lived at for the majority of 2021. As you guys can clearly see, it literally lived in this channel essentially from 30 all the way to 50, basically for 3/4 of the year up until most recently, right? But the last piece I always like to show you guys, or I'm going to start showing you guys now in the videos, if you saw my breakdown of how to set up my charts specifically over the weekend, I showed you guys how I view or how I read a volume profile. For those of you that have never seen or never messed with a volume profile, it's just another tool you can use to formulate an opinion, right? The blue lines that you see is where 70% of the concentration of volume is in a specific ticker, excuse me. The red line is called the point of control, right? Now, this is where the highest concentration of volume in any given ticker is at, right? So the top peak, right? And this is where the highest concentration. Now, why is that important, or why is the point of control something you need to take note of? Well, anytime you're trading above it, it tends to pull you like gravity, right? And it pulls anything that's trading above it back down to it. If you're trading down below it, what does it do? It has a tendency to pull you back up towards it. Why? Because between the blue lines is where the highest concentration of volume is, and we can see that by the gray nodes. These gray bars are called nodes, for those of you that did not know that. But with that being said, with the indicators on the chart, throwing us some signals, right, that it is in oversold, essentially, right? It isn't a buying period. Money has left this play. Now I'm going to play a scenario for you. This is pure speculation. Let's say that they do beat on earnings and they smash it out the park and they hit all their targets they had projected in quarter two. Obviously, that is really bullish momentum, and that's going to get this play on the radar, right? Being that we're trading below the point of control, I could easily see, please remember, this is my interpretation and opinion. I could easily see this running back up to at least the point of control, which point of control, for those of you who do not know, is at 36.89 essentially, right? So that, again, is going to give you some growth if you're looking to buy options or if you're looking to buy shares, right? Keep that in mind. As I mentioned earlier as well, when we looked at unusual whales, I would be more prone to looking at the January expiration date. Just simply, number one, paying attention to the fact that the strikes go all the way up to 85. Here recently in November, they only go up to 35, right? So obviously, market makers are anticipating this is going to stay in the lower range up until at least December or January, right? To give myself the most amount of time, because remember, options are really risky. Don't ever invest in an option money you're not willing to completely lose. Always keep that in the back of your mind. I would be more favoring, based on what I saw in unusual whales, the January expiration date. And if you're looking for the strike, going with the 30 that was recommended on unusual whales would be a good one. That's a safe bet, or the 40 as well, right? These are not what I would call break the bank contracts. You're looking at spending anywhere from $65 to $75. Just slap the ask. Or for the 40, you're looking anywhere from $20 to $50, right? This is pretty much a high risk, essentially, bet, if you will. But with unusual whales, I'm very confident in the information they provide me. I will be paying attention to Vroom's earnings. And if they do get a beat, I will more than likely be a buyer. As always, if I do buy, you will see it posted on IG or Twitter the second I take a position, so that you guys are fully aware. And that way I'm being fully transparent with you guys. But as always, if you have any questions, leave it down in the comments below, or you can always hit me up on Twitter or IG, and I'll catch you guys in the next one.